Hello, Facebook followers. It's Lesley Hodge with Wichita Area Real Estate Experts and eXp Realty. And today I have one of our friends and one of our colleagues, Eric Johnson with BNC Bank with us. So Eric, thanks for taking time out of your day to be on our podcast.
You bet.
So one of the things that I wanted Eric to share with us today is a little bit of his background. I know he's got a passion for veterans, and we send him all of our VA loans because he's awesome at working those. So Eric, give everybody a little bit of your background.
Well, I am obviously a Wichita native, but in addition to that, I did 8 years in the Marine Corps as a machine gunner. So I've been to Iraq twice and Afghanistan. And when I bought my first house in Oceanside, California in 2011, I believe, I really had no idea what I was getting myself into. Didn't feel like I really had any direction or any information on home loans, VA loans, anything. So just kind of felt like I was walking blind. Well, after I got out, I went to college and achieved my degree and decided that I was going to get into finance and help what I really wanted to do was get into home loans so I could help other veterans so they wouldn't have the same problems that I did. And about 4 years ago that happened, and here we are today.
When I started selling real estate, I was 24 and I had never bought a house before. And it was interesting when you're trying to advise people how to do something and you've never done it. So I can only imagine being the consumer, because then I became the consumer after I'd already educated myself. So it's definitely a big learning curve in this business. There's a lot of ins and outs, moving parts that go on. And I know you're seeing a lot of that right now with everything that's going on. So give our listeners a little bit of an idea, like the layman's version of what the differences are on a VA loan versus a traditional conventional loan.
Okay, so obviously if you have a VA loan, you have to qualify under their definition of what a veteran is. And the eligibility for that, you must be active duty. This isn't including your time at boot camp because they don't count that as active service. So if you're a reservist or National Guard, you would need to have been activated for over 90 days. And then if you're a regular veteran, you'd have to be on active duty for 181 days during the peacetime or 90 days during the wartime. Also, if you're a reservist or National Guard, if you have 6 years of service, you can do it that way as well. But with a VA loan, of course, it's a zero down loan, which means you can basically get into a house without putting anything down. The lowest down payment you can do on a conventional loan if you're a first-time home buyer is a 3% down, but they do have income requirements, whereas VA, there's no income requirement. On a conventional loan, you're going to pay private mortgage insurance if you're not putting down at least 20%, and your private mortgage insurance is subject to your credit score and your down payment amount. With the VA loan, if you do not have a disability rating set up with the VA after you get out, they're going to charge you what's called a funding fee, and that's basically what's called an upfront mortgage insurance premium, and that gets paid to HUD in the case of a default. Everybody's money gets pooled together so they can salvage that loan from foreclosure. On your first time use, they're going to charge you 2.3% of the loan amount. So if you have a $200,000 house, it's going to be $4,600. So your loan amount would end up being $204,600 instead of $200,000. If you sell and you use that loan again, they're going to charge you 3.3% after that. Also, so that's the big difference between conventional and VA. FHA is another type of government loan that you can have. They do have mortgage insurance and upfront mortgage insurance. So instead of just the upfront like you would have on VA if you're Of course, don't have a disability rating of 10% or higher from the VA. That's the magic percent to not pay the funding fee. FHA is going to charge you a mortgage insurance premium of 0.8% of your loan amount per year. So on a $200,000 house, you're going to pay $1,600 a year for private mortgage insurance with them. In addition to that, when you buy your house, they're going to charge you a funding fee as well. And their minimum down payment requirement is 3.5%. So you're going to have 3.5% plus a 2.25% funding fee, which comes out to $4,500. And so basically your loan amount would you'd end up losing 2.25% of your down payment from the get-go on an FHA loan. So VA is definitely the way to go if you're a veteran, and especially if you have a disability rating, then you can basically buy a house with zero down and not have any mortgage insurance.
I think that's the good summary of it. I mean, bottom line is they can put less down. Their payments are usually less, even though they're, putting 3% less down because they're not paying the mortgage insurance.
Yes.
It's something I do think that's misunderstood is when people think zero down, they also think there's no other fees that are involved. And there are still other VA fees that are involved, to get a loan, to get that mortgage set up. But those are things that we can negotiate with the seller to pay for you so that you don't have to put any money down.
That's correct.
So I know you mentioned something about if they were to purchase and use their VA eligibility again. So obviously you can purchase it more than one house, after you sell one, get another one. Is there any limitation? So if they bought and sold 10 different houses, can they still get a VA loan, or is there a cap at what they can use?
As long as you sell, there's 3 different ways that you can reuse your VA loan. You can sell your current one and buy a new one, and then of course your funding fee is going to go up if you're not a disabled veteran with that disability rating of 10% or higher. So you live in a current house, you want to move up to a new one, sell that one, get your equity, do zero down again, but your funding fee is going to go up percent when you buy that house if you're not a disabled veteran. The second thing is, let's say you are a move-up buyer, and by that I mean maybe you started out in a starter home, it was a 2-bedroom, 1 bath, and now you have a house full of kids and dogs like me, and you need to get you a 5-bedroom, 3-bath. But you want to keep that house because maybe grandma wants to rent it from you, or your mom or someone. You could refi that one to conventional and buy the new home. Or the third way is you can have 2 VA loans at one time. So basically, if you're going to move out of that starter home and buy a bigger house, you can't buy a smaller house because obviously that's going to look like you're just trying to have a rental property. But you can't have 2 VA loans at one time. So what every veteran has is a $36,000 entitlement, or 25% of the loan amount. In most areas of the country, you have an additional entitlement of $91,600. And that's a total of $127,600 of entitlement. Now, that's not how much the house would have to cost, but that entitlement is used as a percentage of what your loan amount is. So if I have a $100,000 house and that's my startup house, and I use 25K of entitlement, 25% of entitlement comes out to 25,000. I would have 102,600 left of entitlement for the next primary residence that I want. So you could have that starter home and then your move up home, as long as it wasn't too much with the 0% down. Now we have what's called a max mortgage worksheet, where we punch all that in there, and it tells us basically if you go over that and you're wondering how much you need to put down, it will tell you that's that down payment. But that's definitely something your lender will need to do for you, because there's algorithms in there and stuff like that. So
just for my own personal curiosity, since we have a VA loan, with David being retired military, would we be able to keep our current house and then possibly purchase like a vacation property or a second home? Is that possible with a VA loan?
VA loan can only be used as a primary residence, so a second home would not qualify, but there's low down payment options on conventional if a borrower wanted to do that as well.
Okay. So on a VA property, what type of conditions does the house have to meet in order for it to qualify for a VA loan?
There's several things. None of them are really that extreme, but you do need to have a property that's livable. So some of the things you're going to need is working electric, heating, and air conditioning. The roof's going to need to be in adequate condition that will last in the foreseeable future. So it can't be held out and needs to be replaced. The VA would require that roof to be replaced before the veteran could purchase the property. You do need a clean water supply going to the house. And I know a lot of people are sitting there thinking, well, we have clean drinking water. But I've done several VA loans that have wells, and we found E. coli in those. And the well test, basically, they had to go in and shock the well, retreat it, and then retest the water and make sure it was safe, which is all to the borrower's or veteran's benefit. The property also can't have any lead-based paint, and you also need a clean pest inspection. If it has termites, wood rot, fungus, mold, anything like that, all of those things would have to be mitigated before the veteran could move into the property. In addition, you're going to need a working septic and or sewer. Typically, if it has a septic system, you're going to need an inspection on that to see if it works. You also need to have access to a public and private road. So I know some of my veteran buddies probably like to bug out, but you couldn't go get a cabin with no electricity 20 miles off the grid and hike out there and use your VA loan to buy it. So again, has to have a public or private road. Also, the attic and crawl spaces need to be accessible and properly vented, and that's pretty much your main requirements for being able to obtain a VA loan. And if you don't have a rail going down into the basement, they're going to make you perform.
So if anybody that's listening to our podcast today is a veteran and meets the qualifications of what they're considering to be a veteran, and they're wanting to talk to you about getting a VA loan, what's the best way for them to reach out and contact you?
Just call or text my cell at 316-633-2323. Again, it's 316-633-2323.
And one thing I do want to point out, and we try to point this out to all of our veteran buyers, I know that there are big companies that say that they cater to veterans. We won't mention any names because we don't want any hate mail over it or lawsuits, but we all know who we're talking about if you're a veteran. And the thing about that is even as an agent, not only as an agent, but as a consumer even, you're just a number. So they don't have to respond as quick as, like if I message Eric, I pretty much have an instant response. I know that he's busy time to time and it takes a little bit of time or finding an answer for me, but we are all here trying to work as diligently for our clients as possible and making sure things happen because we're local. We're going to see you when we go out to eat dinner, when we can go back out and eat dinner, and when we're going and drinking a beer at the bar. So it's important that people understand that. What's another benefit that you think that you guys offer over some of the big box lenders? We'll call them that.
Well, I want to start by saying that we are actually a top 10 VA lender in the country. One thing that we do offer every single veteran is we waive our origination fee, which is $10.95. The VA will allow a lender to charge up to 1% of your loan amount. And a lot of other lenders do charge that and market themselves as catering to veterans. So for example, if you have a $200,000 house, they're going to charge you $2,000. That's an additional $2,000 you pay to the bank, not anything else. It goes straight to them as profit. We waive that fee totally, but we do charge $10.95 on our other loans. But for veterans, we waive that fee entirely. So that saves you $1,095 right there.
Well, and that's something to think about too, because if you're trying to be competitive in this housing market and you're trying to get in with no money down as a veteran, and another lender is charging, whether it's $1,095 or 1%, whichever one, and we're having to negotiate that with the seller to pay that for you, then it just makes your offer that much weaker. So another reason that we send our VA buyers to Eric. So as someone that that works with Eric quite a bit, Eric, I want to say thank you. You've always taken such good care of our clients. David and I are very happy that we've partnered with you guys. I know whenever we're in some kind of quandary, it's easy for you to reach out to JR and Keith, everybody that's down there at BNC. They've just been wonderful for us to work with. So I want to say thank you for that. And I want to say thank you for taking some time and shedding some light on what a VA loan is and who qualifies for it. So for anybody that's out there listening, get a hold of Eric. He's wonderful to work with, and he'll take really good care of you. So thanks again, Eric, and thanks for tuning in, everybody, and we will see you soon.
Thanks for listening.